Hello, everyone, and welcome to another episode of the VMC Inc. Financial News Network. I'm Victor Campos. So, 2016 just started, and there's a lot of blood on the market floor. We have a lot of negative values to digest on the first trading day of 2016, due in large part with China not being able to keep their market together. But we're going to be positive because whenever there is a chance to accumulate more of your favorite stocks, go for it. And so when prices fall, it might be time to buy. That's not an endorsement for market timing, of course, because market timing doesn't work. But what I'm saying is that looking at today's results, prices might have dropped a bit on some of your favorite stocks in order for us to purchase a few more. So let's take a look at our hypothetical portfolio here. These are 10 stocks that are tech centered. So we've got Apple, Angie's List, Activision Blizzard, Etsy, GoPro, Microsoft, Netflix, Nintendo, Square, and Twitter. On future episodes, we'll talk about the reasoning behind picking these stocks. But taking a quick look, let's organize our data here. I'm using seekingalpha.com. Here's our one-day change. I'm going to put it by percent. So GoPro had a 3.78% increase in value today, which is good because in general, GoPro hasn't been doing so good lately. Apple had a 0.9% increase. And then the good news ends there because then we've got all these negatives. Nintendo lost 0.6, Etsy lost 0.24, Microsoft 1.23, Angie's List 2.35, Twitter 2.59, Activision 2.82, Netflix 3.87, and Square lost a whopping 7% of its value, which is 93 cents compared to its $12 share price, but 7%. So let's see, if we look at our data as our holdings, we've got in this hypothetical portfolio 1 share of each of these stocks, which we purchased on the first trading day of 2015, except of course for Etsy and Square, which had IPOs in 2015. So the first trading day is when we purchased Etsy and Square. So holding on to these, 1 share of each of these stocks for 1 year. Let's see what we get here. Since purchase, let's put that over here, percentage. Okay, so since purchase, if we've bought Netflix at the beginning of last year, we had an increase of 120%. And 0.57 if we bought Netflix at the beginning of the year. That's big. Then we had Activision. If we bought Activision at the beginning of the year, we increased the value of that 86.89%. Angie's List is hovering around penny stock value at the moment, and if you had bought at the beginning of last year, you've made a 42.88 increase in your investment. Nintendo had a very good year, announcing some big changes in their strategy, which resulted in a 32.25% increase. Then we've got Microsoft. Microsoft has been resurgent, and it yielded 17.19% increase. Shockingly, Apple, actually, here we get into the losses. But Apple, if you had bought Apple shares at the beginning of last year, your investment decreased 3.64%, as did Square, which we're not really going to count too heavily with this value because Square barely had their IPO in November, I believe, 2015. But if you purchased as soon as it went IPO, then you've lost 6.96%. Twitter hasn't been able to get things back on track. They've lost 38.35%. GoPro, really tragic. This is the one that really hurts me. So 72% loss in value from holding it on for it a year. I remember when I bought GoPro stock in 2014 and seeing it reach $98 a share. That was the perfect time to sell. And now it's at $18.69 a share. Will GoPro come back? That'll be speculation for another episode. And finally, Etsy. That's another one that's pretty tragic. 72.53% loss in value if you held on to it since its IPO, which was in April 2015. But in total, one share of each of these 10 stocks has a value of $395.73. A change since purchase. We actually made $3.73 for the year. If you had $395 in a plain old bank, good luck making $3.73 in 1 year of holding it in a bank, which is almost 1% increase in our value. The performance of these stocks. Let's look at some 52-week ranges. So again, Netflix did really well over the last year. Activision, Angie's List, Microsoft, just another way to look at our data. And here's another important metric, dividends. You're going to invest in companies that you believe in. And one of the things that I would really look for is what sort of dividends do they give you back? So that's on top of the increasing value of the stock, but this is extra money in your pocket when these companies pay out monthly or quarterly dividends. Let's take a look at some dividends. Not too many companies in this list are paying dividends, which of course could change, but here we go. We've got, let's look at it this way, dividend yield. Microsoft had a dividend yield of 2.6%. So good luck getting any bank to pay you a 2.6% dividend. Apple had a 2% dividend yield. And Activision, 0.6. Twitter has not been paying dividends, so that shouldn't matter. Angie's List. And I know Nintendo has paid dividends, because it's a foreign company, perhaps Seeking Alpha is not quite showing the data properly here. But this is our hypothetical portfolio of stocks. This is what we're going to use throughout the year 2016. So I'm going to update my values here. There we go. So we've purchased one share of each of these 10 tech stocks on the first trading day of 2016. I'm omitting commissions, of course, because that's up to your brokerage, but that always affects the value of any portfolio. So we're going to then have these holdings for the year, and we're going to go throughout the days and the weeks looking at our choices of our stocks, commentary and analysis, and hopefully 2016 is a year of opportunity from crisis, and we will be checking back periodically to see what our stocks look like. So this has been Victor Campos for the VMC Inc. Financial News Network. See you next time.